Hi everyone, I am Karan and welcome to Karan's Gyan. Today I'll talk about Aitibilla Fashion Retail Limited's quarter 1 result, and honestly speaking, I wasn't quite impressed by ABFRL's quarter 1 result, and well, my disappointment is expected because ABFRL is having a hard time in the industry. Well, it's simply because pandemic has caused a slump in its sales, and we can see the impact of that on quarter 1 results. However, apart from me, the market is quite impressed by ABFRL's quarter 1 result and has rewarded ABFRL with about a 10% increase in share price. It increased about 11 rupees today and it reached at 130 rupees. Now, if I look at 1 day chart, I see it started trading at 118 just as the market started, and immediately there was a bump and it made a 1 day high of 132 rupees and ended up closing at around 130 rupees. So quite a reward for Atabla Fashion Retail. But if I look at 52 week high, I see it made a high of about 278 rupees on 24th February, just before it started drastically falling along with Nifty 50. So it is quite understood why ABFRL has been falling for the past few months, and it is quite understood also why market has rewarded it, because market is quite optimistic about ABFRL as as its future looks good. So let us have a look at quarter one results. I'll start the video with quarter and quarter analysis. So I see we can see the company has a really big scale of operations. It had revenue of 1800 crores, 1800 crores in March 2020. However, its revenue has slumped by about 80% to 323 crores this quarter. Well, this is understood because of lockdown and because of a lot of other measures. Its primary income from on-site or offline sales, as I would say, has been impacted tremendously. If I look at finance costs, so I am actually worried about finance costs because it seems that Atabullah Fashion Retail is bloating up with debt, and we can see there has been a 6% increase in the finance costs in 1 quarter. If we look at year on year results, it will be quite worse. If I look at year on year change in finance costs, last year it was paying 94 crores as finance costs, and this year, this quarter, they are paying 126 crore as finance costs, about a 33% increase. So one third of their finance costs have increased. So this is a problem for Atabla Fashion Retail. It seems to be over leveraged. If I look at expenses, expenses have dropped down, well, because of the lockdown. Many of its stores are shut. It doesn't have unnecessary expenses. It doesn't have to pay rental expenses. It terminated many leases in force majeure act, and it is not selling as many goods as it was selling. Hence, its cost of products or cost of material have dramatically been affected, and hence we can see a 50% drop in net expenses. We can see the impact of net profit. Last quarter, Altabilla Fashion Retail was making a net loss of 146 crores, and this year this loss has almost become three times, about 180% increase, and it is making a loss of 407 crores. So the situation has gone from bad to worse. Operating profit margin has been severely hit, from 8% negative operating profit margin. I would say its operating profit margin is now negative 111%. A huge number and a very bad number for ABFRL. But things look good from now, and like, I'll share my experience. For example, I visited a mall a couple of days ago, and I saw a lot of people in the mall, and it showed that, well, people have started spending again, and the consumer spending is increasing. Hence, this consumer spending would reflect in ABFRL's quarter 2 results, and we would see good quarter 2 results, and that is what the market is also thinking. The market is thinking, well, the quarter 1 results aren't as poor as they expected, and they believe quarter 2 results to pick up, and they expect ABFRL to be back on track in the next 2 or 3 quarters. If I look at year on year results, revenue from operations have fallen again drastically compared to June 2019. I see June 2019 revenue from operations were 2065 crores, whereas now it's 300 crores. Finance cost, like I talked about, it has been increased drastically by about 33%. Expenses, again, expenses is because the stores weren't operating as much as they were. Now, if I talk about net profit, so net profit here is 35 crores if I talk about June 2019. But if I look at net profit in this quarter, you can see this number itself, a change of 1260% from profit making company to loss making company. Now, if I look at operating profit margin, severely hit again from 15% positive operating profit margin to negative 111% operating profit margin. A huge drop. Now, talking about the business of ABFRL, it is in, like, you can see the size of a company that is having a revenue of 2000 crores in a quarter is not a small company. And we can look at the brands ABFRL has. It has a variety of brands catering to different segments, consumer segments of apparels. And it has luxury, super premium, premium, sub premium, value, and mass production. Like Style Up is mass, Pantaloons is sub premium, Peter England, Forever 21 sub premium, Van Hussein, Alan Solly, Louis Philippe, American Eagle premium, Simon Carter, Hackett, Ted Baker, Jaipur, Polo, Ralph Lauren, Fred Perry super premium, and luxury items like the Collective, Ralph Lauren, and Shantanu and Nikhil. Now, talking about the distribution of the company, so it has about 2662 brand stores, 342 pantaloon stores, about 23,700 multi-brand outlets, and it has about 6,754 uh, retail stores as department stores. So it has ventures with a lot of department stores that are authorized to sell their products, and these department stores aren't organized by them outright. These are privately owned department stores. Now, talking about the COVID-19 measures. Now, the first measure I would like to talk about is the rights issue. Altabilla Fashion Retail came out with its rights issue, and this rights issue was particularly targeted to reduce the debt. And like I pointed out, the debt problem of ABFRL, it seems that a rights issue would help this debt problem drastically, and we would see quarter two results where we would see a decrease in finance costs because of its debt problem being solved. Next, it is scaling up its online business. In Forever 21, it observed that Forever 21 online traffic had picked up by almost 100%, and similarly deployed online applications for almost every other brand following Forever 21. And it seems to have picked up its sales in the other brands as well. So, a very good factor that you need to keep in mind. And moreover, as the market is being disruptive, you have to come up with disruptive solutions in order to match your competition. It has been producing masks and PPE. By PPE, I mean the full-on protective covering gas, and the masks here are cloth masks and not N95 masks. So again, the management is making the right decisions, and it seems that by quarter two, ABFRL would show reasonable growth, and by quarter four, we can expect ABFRL to be back on track. So, guys, this is my research and my analysis on quarter one results, and I hope you like my video. Thank you very much, and have a nice day.